Mr. Basumallick, since we're talking about the domestic triggers, just in a week or so, we'll get the RBI policy also out. There is again a lot of expectation that this time around, the third consecutive time, we could be seeing some support extended from the RBI when it comes to the slowing economy. A 25 basis points cut is what general expectation is this time. What's your own suggestion as far as the RBI policy is concerned? Many also hope that there could be two more policy cuts as well. Are these triggers that are already penciled in, or do you think in the markets they will be able to probably cheer more once the cuts finally happen?
Very difficult to figure out whether what is actually priced in. But my expectation is that this year we can see at least two rate cuts by the next 1 year from now. We can actually see maybe 3 or 4 rate cuts, right? So we are now in a reducing or a declining interest rate regime for sure. And not only are we going to see reduced inflation, I think we've already started seeing that. We've had an early onset of monsoons, which is good for the rural economy, which is probably good for food inflation coming down. So overall, I think in India, primarily, you see inflation comes from two places, at least the worst kind of inflation. One is food, the other is fuel, right? And if food inflation goes down, fuel, it's been in a range for a while, and I don't see that sort of going up a lot because, again, global policy of pumping more oil sort of puts a lid on the prices. So overall, I think inflation, etc., will be reasonably contained. So that gives a lot of room for the RBI to actually do these rate cuts. And if those rate cuts come through, then obviously it's good for the markets.
If you like the video, do like, comment, share, and subscribe.